Alright everybody, welcome to my beginner's guide to day trading, the complete version. I am gonna do everything in my power to be able to help you build the confidence and have the knowledge to be able to take your first trade if you've never done it before. And with that being said, none of this is financial advice, okay? This is strictly for educational purposes only and entertainment. It's not financial advice. I'm not a financial advisor. Read this. There is extreme risk in investing in stocks, especially with day trading, which is what we are going to be learning about today. Now, we are going to go over a handful of things. We're going to go over stocks, options, and futures. And at the end of the video, I have a little something that I wish I would have known about a long time ago when I first started trading, which is a little something called prop firms, which is basically a company that you pay a small fee to that gives you access to a lot of money to trade with. And the best part about it is it minimizes your risk. And what we're going to learn about today is trading and what is trading. Trading essentially is minimizing your risk. You want to keep your risk as low as possible so you can make as much money as possible. Okay? And rule number one for trading, just so you guys know, is always protect your money, protect your capital, keep your money above all costs. If you're just getting into trading, then your goal should just be to keep your money and not lose it all in your first year. Now, in this video, we are going to have some very basic education, but we're also going to have a little bit of advanced for the people that are already trading and wants to, get a little bit more of an edge in the markets. So this is not just for beginners, but for the most part, it is for beginners that have never traded before, that want to get into day trading. And, you know, the reason I'm doing this is because day trading has changed my life. You know what I mean? I've been traveling the world, the entire world, for like the past year and 1 month now. And, I wouldn't be able to do it without day trading. Um, However, one thing about day trading is there's a very high percentage chance you're going to lose in the first few years while you're learning. So, you got to make sure that you have some kind of stable income to be able to support your life, your family, whatever you got going on while you learn to day trade, because day trading is not something that, you just get rich. It's not a get rich quick scheme by any means. Everyone thinks it is. It is definitely not. Can you get rich very fast with day trading? It's possible. It is very possible. I've myself have made $420,000 in 1 week before trading SPX options, which is, super high risk, but I took the risk and I came out on top. I made $420,000 in a week. So I mean, it is very possible. And that was only with a $30,000 investment. So it is possible, but that is not the mindset you want to have going into day trading. And it will take years of trial and error and dedication. You gotta keep on learning every single day to become better and better and better. Remember, you're versing the professionals. You're versing people with billions of dollars in the market. You're just a small fish compared to them. They control the market, so you got to go based. You got to make your trades based off of what they're doing, and you follow them. You don't try to, make up something in your mind and, oh, I think this is going to happen, so I'm just going to do this. No, you got to look for signs, you got to look for signals, and then go with it. With that being said, let's get right into it. We already have our disclaimer, credible risk, right? Now, introduction to day trading. Now, what is day trading? Day trading is buying and selling a commodity, indice, whatever you're trading, Personally, I like to trade Nasdaq, and that's what I focus on. The Nasdaq is basically the 500 top tech companies in the world, all combined into one stock or one indice. It's kind of like an ETF. Now, what are the key characteristics? It's buying and selling within the same day. That's what day trading is. If you're not buying and selling the same day, then you're moving into swing trading or long-term investing. We're focusing on day trading, and I'm going to try to teach you how to day trade. Now, there are the other styles. If you're not interested in day trading, then this might not be for you. Maybe you want to swing trade. Maybe you want to, enter a position and hold it for a day, 2 days, 3 days, a week, something like that. Long-term investing, you're buying a stock and you're holding it for years and hoping it just goes up. I like day trading because, I'm buying and selling either within seconds, minutes, sometimes hours. And, as soon as I buy or sell, I get out of my position, I get to keep the money right away. I get to take that money out, spend it however I like, and, it's my money. With swing trading, long-term investing, you never know what's going to happen, right? Um, on a Monday, you might be in a great position. Then on Tuesday and Wednesday, oh my God, everything's going so good. You're up a bunch of money. You're like, oh, I'm gonna hold it for a little bit longer. And then on Thursday, fucking World War III breaks out. Something fucking happens, completely annihilates your position, and you lose a bunch of money. So that is why I'm not a fan of swing trading or long-term investing personally. I like day trading, and I have had quite a bit of success with it. A little background on my history of day trading. I was unprofitable for 2 years, and then now I have been profitable for about 2 years. This week alone, I have made about $31,000. And, it took me a long time to get to this point, but, $31,000, that's sometimes what people make in a year. And I made it in a week. So the potential with day trading is pretty incredible. If you could do it right and if you're willing to learn. You have to consistently be learning every single day and practicing every single day. Whether it's for 10 minutes, 20 minutes, 30 minutes, an hour, whatever it is, it takes dedication. Just like anything worthwhile, you got to put your time into it and you got to learn your lessons. And, if you do end up losing in day trading, it's going to happen. Everyone always loses, no matter what. No, there's nobody that just always wins. Every loss, you just gotta consider it like a college tuition fee. You took a you lost some money or you spent some money on tuition, right? Now the benefits and the risk of day trading. Potential for high returns. If you're trading in one day, the market moves significantly sometimes one day. You catch the right position, you can make a crazy amount of money in just one day. The other day, I was able to make $20,000 in just one day, and it only took me about an hour. So the potential for high returns is definitely there, 1,000%. But the risk is also there, right? There's extreme volatility in the markets. You never know what's going to happen. One person somewhere in the world could completely destroy your position if they have enough money. So there is extremely high risk. Not to mention psychological stress. There are very high ups and downs when you first start day trading, and sometimes even when you're further in. Managing psychological stress is something that, I practice every single day. And I'm actually building an entire masterclass with the DGT Mafia to focus on the psychological portion of day trading because I believe that is one of the most important things. Strategies, stuff like that. I believe that's only 10% of the battle. I believe 90% of the battle is through psychology, and that is why 95% of day traders or 90% of traders, whatever the statistic is, but it is up there, never end up making any money because everyone always thinks it's in the strategy, it's in this, it's in that. No, it's in your head for the most part. You just got to be able to, handle the ups and downs, practice patience, and know when to get out of a position or know when to enter. And that is stuff that I'm planning to educate people on. So let's keep moving on. Now, the types of financial markets. There's stocks, right? Which are basically you investing money into a specific company for a very small ownership percentage of that company. Now, if you have a shitload of money, you could buy, a major part of this, a part of a company, and you can get like a seat on the board of commissioners or board of directors, whatever you want to call it. But that is not my main focus. Stocks are typically something that you know, people just buy and they just hold them for long periods of time, which, I did start my trading journey trading penny stocks, and I did fortunately make some money in my first few months and then ended up losing it all. But, you could day trade stocks and it is possible, but in my opinion, stocks are more of a long-term investment. That's just my opinion. But that's what a stock is. Options are basically a contract giving you the right to buy 100 shares of stock in a company, right? Now there are two different types of options. There's calls and there's puts. Calls mean you want the stock to go up, and then if it does go up from where you bought it, then you make money. There's puts as well. Puts mean you want it to go down, which means if you buy a put and the stock goes down, chances are you'll make money. Now there are many, many factors in options that play into the price of the contract because it's not actual stock. It's a contract to buy 100 of that stock at whatever price you chose. And futures. Futures are primarily what I'm trading and what most of the guys in the damn good trading mafia are trading. And we are using prop firms, so we're using other people's money to mitigate our risk and to have uncapped amounts of profit we can make. So I feel like it's kind of a no-brainer to especially if you're brand new to day trading, and if you want to start day trading, then use a prop firm. A prop firm will give you money for a small fee to trade their money. So yeah, I mean futures, they're basically the same thing as options, just they have longer expiration dates. And there was a story of a guy that bought 1,000 futures contracts of egg, right? Because you could buy eggs or dairy or oil or anything like that. There was a story where he never closed out of his futures contract, and the contract expired, so a ton of eggs showed up at his house, and this guy had like 10,000 eggs. So futures are basically real goods, real products. But what we're trading, NASDAQ, is actually pieces of companies. So you won't get, physical goods delivered to your house. And I don't know if it's a myth or if that actually did happen. Um, I think it actually did happen because you actually do buy, certain amounts of physical goods with futures contracts. But then there's also Forex, which is the trading of currencies. This is something I highly do not recommend. It is one of the hardest things to trade, and if someone told you that trading Forex is the key to financial freedom, all that bullshit, it's not. It is way harder than any other form of trading, especially compared to futures. Forex, with Forex, there's a thing called spreads, right? So let's say let's pull up a chart here. Let's pull this up. So this is the Nasdaq chart, right? Let's say I wanted to buy in right now at $20,068, right? The spreads on on Forex would mean that if I bought in right at $20,068. My fill, and I wanted it to go up, so I bought it. My fill would probably be, you know, at 2072. So I'd already be minus, a few percentage points immediately. While with futures, the spread is so much smaller that it's only a few ticks, which, there's 4 ticks per dollar point. And yeah, you don't go as negative um, when entering a position than you do with Forex. Okay. Yeah, let's go back to presenting. And then there's crypto, Bitcoin, all that good stuff. Personally, that's probably the only thing that I would buy and hold because, I'm a believer in crypto. I believe it could be the future. But yeah, those are the different types of financial markets. Don't want to spend too much time on it. But, you know, that's a good little rundown on what they are. Now, market participants and their roles, okay? Retail traders are us. People at home trading off their laptop. We're trading with whatever money we have, and we're the retail traders, right? And just like with the GameStop um, fucking craziness that happened this year and in 2021, it was a band of people just like us that got together and, destroyed the institutional investors, which are the other type of investors. These are the guys that spend, billions and billions of dollars um, trading other people's money, their own money, and um, they're basically the people that move the markets, right? Institutional investors are typically the ones that we want to follow. As retail traders, we typically do not have enough money to actually move the markets, unless you are trading with, a few $1 million or a few $1 billion in your portfolio. Typically, we don't have the money to move the markets. So we basically, our job is to follow institutional investors, which are the guys that have billions and billions of dollars to trade with. And they are also the ones that got completely annihilated in GameStop when the retail traders banded together. But that's something that may never happen again in history, even though it almost did happen once again this year. And then we have market makers. Market makers are basically companies that buy and sell stocks to you, right? So let's say I wanted to buy 100 stocks or 100 futures contracts. The market makers will find someone who is selling the same amounts of contracts or shares of stock that I want to buy, and they will exchange. So, right, that person's going to sell those contracts or shares to me. So that's what market makers do. They're the ones that actually make the transactions go through, and, as long as you're trading something like Nasdaq or, basically any futures or any major stocks or um, you know, anything like that, then you won't have any problems with liquidity. And that is something that we're going to get into later because liquidity is a big, big, big factor when it comes to trading. But market makers typically make it so liquidity is not an issue for us and we could trade seamlessly. And then the last one is brokers. Brokers are like Robinhood, which you should never ever use. They are complete BS. And then there's also Webull and stuff like that. And yes, here are the platforms right here. You can choose a brokerage, right? The brokers. TD Ameritrade, very good platform. That's who I used to use. Was just acquired by Charles Schwab, so now they are part of the Schwab company. Now, if you are looking to do something simple and not really dive too deep into trading, I would not recommend using Robinhood. I would recommend using Webull. Webull is very simple to use, and it is almost as simple as Robinhood, but it also gives you more information, which, could give you a little bit of a learning curve, but if you want to be successful, then you gotta, be able to be open to learning. Or if you want to go with a bit of a more um, you know, technical and if you want more like technical analysis tools and stuff like that, then maybe something like TD Ameritrade or Schwab or Thinkorswim. Those are all basically the same thing. That's especially if you're going to be trading on a computer. They do have a good mobile app as well, but um, that is the platform I would recommend for stocks, futures, and options. Yeah, options are my favorite with TD Ameritrade or Thinkorswim. They're the same thing, and they are now under Charles Schwab. Now, and all different brokers have different fees, reliability, ease of use. I would only recommend going with the mainstream brokers like Schwab, like Webull, like Tradeovate, like NinjaTrader, like Sierra Charts, stuff like that. You don't want to use brand new brokers because you never know if they're just going to disappear and they will be able to take your money away from you and you will get scammed. So be very careful when choosing a broker. And then prop firms, like we discussed earlier. There are companies that will give you money to trade with for a small fee. For some examples are TopStep, Fast Track Trading, My Funded Futures, and um, yeah, those are the best. Those are the top three in my opinion. TopStep, Fast Track Trading, and My Funded Futures. Now, two of those are going to make you go through an evaluation phase. So you pay them a fee, they give you an evaluation account, worth $50,000, $100,000, $150,000, and they give you certain rules you have to follow. And you have to go on their website, you have to read their rules and really see what they require you to do, and you have to follow their rules. But let's say My Funded Futures, for example, if you chose the $50,000 evaluation, you'd have to make $4,000 in profit total. It doesn't have to be in one day, it could be across a month or, however long you want. And if you reach that $4,000 profit target goal, then they will give you a real sim funded account. So it's not real money, but it is a funded account where if you make trades and you make profit in that account, you will get paid real money. And that is what many, many people are doing nowadays because it is mitigating your risk incredibly. And it still lets you make enormous amounts of money. I've made, I bought three accounts for My Funded Futures for maybe like $300, $400. I made $12,000 in my first payout from them. So, I mean, it's uncapped. I stopped at $12,000 because after I took that money out, I ended up blowing the accounts, which does sometimes happen, and you shouldn't feel bad if that does happen to you because losses are a normal part of trading. Now, there is one firm right now that actually doesn't have that evaluation phase. It's called Fast Track Trading, and they give you funded accounts instantly. So there's no evaluation phase, right? Where that's the challenge you need to be able to get funded and then start making real money. With Fast Track Trading, you can instantly start making money, which is pretty awesome. But their fees are just a little bit higher. But if you want a discount on any of these prop firms, you can go into my Discord. You can find the links to all their websites and always use code DGT and it will give you the max discount available always for whichever prop firm you decide to go with, if you decide to go with prop firms. And then there are some essential tools for day traders, charts and technical analysis tools. Those are all great. TradingView, I like it. I really like TradingView. You can see my TradingView right here. This might look like madness to some people, but when just like when you're starting anything new, there's a learning curve. You got to learn things. And I do have multiple indicators on here. Some I pay for, some that I just drew on here. Like this blue line was a trend I was following. And when this trend broke, I took a long position and I made some money right here today, actually. And yeah, there's tons of tools. If you're really looking to dive into like deep technical analysis, TradingView has some of the best tools. It is a paid software, um, so yeah, you got to pay for it. But if you don't want to pay for um, technical analysis tools, then some come with trading platforms like Tradovate, where you could put, VWAP, which is volume weighted price or average price, right? This is a level that price typically likes to come to. It is, the median price. It's the price weighted by volume. So buy and sell volume, it's like the median price. That's what this white line is. Then there's like 200-day EMA, which is exponential moving averages. And there's a 50-day EMA, which basically it's the average price for a 50-day period. And you know, there's a bunch of different ways to get into that, and we can get into technical analysis tools and stuff like that in another master class. But let's stick with the bare bones for this one because this could turn into a lot of information. Now, news sources. This is very, very important. You need to be on top of your news. There are websites like forexfactory.com, financialjuice.com, which will tell you if there's major news events happening. There was a time where I was very heavy in a position, about 10 contracts on NASDAQ, which is worth about $10,000, and I was unaware that there was some news happening, and I shit you not, 1 minute after I entered the position, I lost all of my money instantly because I did not know news was coming, and it was high impact news, so I just got annihilated all in fucking 1 minute, or basically 1 second. As soon as I was in the trade for 1 minute, then as soon as the news hit that I didn't know was happening, boom, 1 second, all my money was gone. So you have to be on top of your news. I wouldn't recommend trading news because it is crazy and it is dangerous. I literally lost all my money in just 1 minute, in one trade because I wasn't aware of the news. So stay aware of your news by looking at websites like Forex Factory and Financial Juice. They are free. What's next? Market orders and execution. There are multiple types of orders you could place, right? Market orders mean you are buying in right at whatever the price is right now. So as soon as you hit that market buy or market sell button, boom, you're in the trade. You're filled. You're either making money or losing money right away. That's a great way to just get into a position immediately if you see a potential move about to happen. And there's also limit orders, which I could show you right now. These are typically the types of orders that you want to use because they are, you know, when it comes to trading, you don't usually just want to jump in to something just randomly, right? Because you want price to come to you so you have a higher chance of success, right? So let's say, this giant run up is just going crazy for whatever reason. Holy shit. I found a level based on my technical analysis and I want to get in once it hits this price right here. So what I would do is I would click, boom, set a limit order right there. So that means once price comes to that line right there where I set my order, I will be filled and I will be in the position, whether it's a buy or sell. This specific scenario is a sell for 15 contracts, right? So right now I'm in no position. But if for some reason price shoots up right here, or it slowly grinds up and touches this line, I will be filled and I will be in a position, right? And in trading, you typically want to find levels, um, that price has, either bounced off of, touched on, reversed off of, stuff like that. Like, for example, right here. I mean, price has touched this area right here one, two, three, four, five, six, 7 times. And pretty much every single time it's been super dramatic, except for the one time that it actually just ripped through. But as you can see, this is a key level right here. So what I would want to do is, take take a horizontal line and mark this level, right? And this could be a potential entry for me, right? If price was ever to come back down to here, I could potentially take a long position thinking that it's going to bounce off of this and continue higher, just like it did, here, 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 and then just insane move here. So that's how you'd kind of play limit orders. You'd look for positions where, price has made some kind of reversal or, has come back to multiple times, and you'd want to potentially put your order in there, right? Makes sense, hopefully. Let's go on to stop loss orders. This is so crucial, okay? So I cannot tell you how many times there has been times where I was in a trade where, I was so dead ass convinced that price was going to go up, right? So I took a long position, thought it was a good entry, and it started going against me, right? And let's say we took let's say we took a long position right here, right? We put a buy order right there. We got filled. We're like, okay, if price comes down to here, we're gonna stop. This is gonna be our stop loss. We got filled right here. We're gonna get out. We're gonna take a loss. We're gonna cut our losses. We're gonna be out of the trade if price comes down to here. Something you never ever ever want to do, is, oh my God, price is coming down. Oh my God, it's gonna hit my stop loss. Oh my God, I don't want to be out of this trade. I think it's gonna go up. Oh my God, I'm gonna move this down, move this down, move this down, move this down, move this down. And then what if, this didn't reverse and come back into your favor? What if it just went down the entire day and you lost all of your fucking money? Because that has happened to me before. So placing stop losses is crucial. You never want to have a trade without a stop loss. Whenever you get in a trade, you want to have an idea, okay, if I'm going to enter here, my stop loss is going to be somewhere down here. Okay, sure, it might go red a little bit, but then boom, because your stop loss was down here, boom, it went in your favor, boom, boom, it went up, oh my God, and you just made a bunch of money, right? But if your stop loss was right here, do not start moving it down, because I've done that before and I have never recovered from it, because, or, there were times where I never recovered um, the account, and I ended up blowing the account because I kept on moving my stop loss down. You could always exit and just re-enter in a new position. So obey your stop losses, and use a stop loss. There's always another opportunity in the market. Always. There's opportunities every single day, hundreds of them. So do not be ashamed if your stop loss gets hit, and do not move it. Make sure you place it in a place where, you know, has a high probability that it won't go there. I have a whole class on stop losses in the DGT Mafia Masterclass, um, that you could watch if you wanted to learn more about placing stop losses, and how to place them, and how to place take profits, and how to place order entries and stuff like that. But the one tip I can give you right now: never move your stop loss once you have it set. Just take the loss and look for a new trade. Now, order execution and routing orders are routed through market makers, like we talked about. Someone out there is their sole job is to make sure you're able to enter and exit your position. Um, and liquidity is a major thing in the markets, right? Um, we don't have to worry about not having enough liquidity to enter or exit a position, unless you're trading with significant amounts of capital, because typically, um, the instruments we're trading, like NASDAQ and stuff like that, there's plenty of liquidity to go around, so we don't have to worry about that too much. But if you're going to trade something like penny stocks, or, some kind of, I don't know, random crypto shitcoin, there might not be liquidity. And what liquidity is the ability to get in and out of your position. And if there's no liquidity or not enough liquidity, then you could be stuck in a position and you could never get out. Luckily, we don't have to worry about that. Um, and I don't really want to get too far into that because, that's typically for complete degenerates, um, that are trading shit coins in the meme coin world of crypto, that need to worry about liquidity and stuff like that. And order routing, something that your brokers handle, and that's a little bit more advanced. But basically, whenever you place an order, your order is routed to a specific company, and that company fills you, sends you back your position, and you are filled and in a trade. Now, basic chart analysis, okay? We already looked at the charts. One thing that is crucial to play with is chart patterns or trends. So if we go back over here, we could clearly see right here that there's a downtrend, right? So what we want to do, take a line, boom. This is a downtrend. It is holding this downward. Actually, we can make this a little tighter. Because this fell off a cliff super hard right there, we would draw something like this, right? And a trend is typically your friend in the market, right? That's the saying. The trend is your friend. We want to go with the trend because, like I said, we don't have enough money to move the markets. So, institutions typically create the trends. And we want to follow them because they have more money than us and they could destroy us. So if we see this going down, 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 we don't want to be looking to buy here. We want to be looking to sell. And then, somewhere around here, when this candle wick right here, we'll get into candlesticks in a second, but see this wick right here? That shows that price sold down to here, but then in that same 1 minute candle, people bought this all the way back up, and the next candle opened and it went up, right? Breaking our trend line. We want to follow trends. And if a trend is broken, then you want to avoid, you know, getting into a selling position. If a downtrend is broken, you want to start looking for a new position. Now this consolidation phase right here, there was no trend, right? It was just bouncing back and forth. But then over here, boom, a new trend started. Boom, boom, boom. It went up, and then it stopped right there, and then it broke the trend, right? The trend is broken right here. So then we'd want to exit our long position, wait, because patience pays, wait to see what the market does. In this case, it did go up a little bit more, then came down, and then it fell off a cliff again. This was another downtrend forming right here. So that's trends. You want to watch trends. You want to play with trends. The trends are your friend. If anyone's wondering why everything is in Thai, this is my girlfriend Nest's Canva account. So everything is in Thai. Now, analyzing historical price movements. You know, what did price do for the past week? Did it go up, for a whole week? Like here? I mean, this was 1, 2, 3, This was basically 3 days of just upward momentum, just straight bullishness. Bullishness means it's going up. People are buying like crazy. Historical price, the history tends to repeat itself. If price is fucking shooting up like crazy, chances are we're in um chances are the masses are in a psychological state that they believe that this is a good place to buy. So what we're going to want to do is look at the history and assume, because price has been going up for so long, that, possibly tomorrow it'll keep going up, right? But we won't know until tomorrow. We got to kind of see what happens when market opens tomorrow. Maybe we do come down. But looking at the daily chart, if we could fix this. Look at this. The market's been going up for a crazy long time. Now, as day traders, we don't really care too much, but we want to know if we're in a bear market, like we were right here for about a week. You know what I mean? Right now we're in a bull market. So we need to choose a daily bias based on price action we see when we start looking at the charts, and then also based on the price action we've had for the week, right? So in this kind of zone right here, if it's been falling for a few days, we could choose a bearish bias, betting that it'll go down. And then, at some point we'd have to switch to a bull bias and try to catch this run up. And, with futures or basically stocks in general, anything, if you don't want to day trade, you could always just buy and just hold through, whatever you want, however long you want. Um, Based on history, the stock market generally does like to go up. So, I mean, if you really wanted to, you could, purchase a position in whatever stock that you like. And historically, as long as it's a good company, or if it's, the ETFs, like combination of companies like ES or NQ, historically it does go up. So if you wanted to, you could always just um, hold a position and not have to worry about day trading. But I like day trading, and I want to teach people how to day trade, because with long-term investing, you can make maybe 10% a year, something like that. That's the average on a good year. Um, while with day trading, you can make 100% returns in a day or a few hours. So that's why I am a day trader. And now these are the candlestick basics, right? Candlesticks are the preferred method for day trading. You don't want to use a line chart. There are other types of charts like Heikin-Ashi, stuff like that. But candlesticks are usually the um, preferred choice, right? And this is the candlestick basics right here. Um, you know, this is a wick. It's also called the upper shadow. That means price went this high, but then something occurred and people started selling, and it ended up closing right here, right? Same with here. The candlestick opened fucking selling, people were selling, then people bought it up, bought it up, bought it up, and it ended up closing green, right? So it closed positive. If it closed negative from where it opened, then the candlestick would be red. And the body of the candle shows um, basically, where price is going to be sitting, and like where majority of the volume is, right? The wicks mean people are losing interest in those levels, or somebody just put in a massive order and moved the wick up. Um, there's ways to read wicks. We'll go back to this. We'll go to the 15-minute chart, right? So right here we have a giant wick from the downside, right? Now if I turn off my indicator here, this candle was red, right? But because it got bought up so hard, so fast, in this 15-minute period, there's a giant wick at the bottom. This is a good indication that people want to buy. People do not want to sell any longer. They do not want price to go any lower. So if you see a giant wick like that to the upside, this is called a hammer candle. That means it's typically bullish. This is one candle that typically means or has an indication that there's a good chance that price is going to continue going up, and it did go up, and then the market closed. But as you can see here with this top little wick right here, this little baby one right here, people didn't want to push price even higher. People ended up selling it back down, so now there's an up wick, which means that there was less interest in pushing price up. They wanted to keep price down. And then now it's just kind of doing its thing over here, which doesn't really matter because the market's closed. And engulfing, oh, okay. Let me show you what an engulfing candle is. This right here is a bullish engulfing candle. No, sorry. This right here is a bearish engulfing candle. See how we had 3 candles going up, and then one giant red candle that ate all of these candles, especially this one. This candle engulfed this top 15-minute candle, right? We had this huge wick right here indicating sell pressure, and then in the next 15 minutes it fell roughly almost 80 points, which is a lot on NASDAQ. That could be a lot of money. With 10 contracts, that could be upwards of $10,000 in just 15 minutes, right? This is an engulfing bearish candle, okay? This is a bullish engulfing candle. It just completely ate up every little candle here and just completely just fucking went to the moon. And then a doji. A doji candle is something like this. Price didn't know which way to go up or down. It just kind of stayed in this little tiny range. And, it has a wick on both ends. Price, just the market's not sure which way it wants to go. This is also another little doji. Basically, it's a doji candle is a very small body with big wicks to either side, indicating uncertainty in direction. Technical analysis and fundamentals. There's moving averages, which we kind of went over. We went over VWAP. VWAP is, the volume weighted average price. Generally, this is probably one of the only indicators you want to use, and you want to focus on price action. Support and resistance levels, we kind of already went over a little bit earlier, but we could do it one more time. This is a support level, right? Price fell down to this level, went back up. Price broke through that level, indicating that it was weak support now. Went right back above it, but then look at that. It held support right here, and it continued up from there. Another major support level would be right here at this bottom, where price tried to break through a few times and never could. So what we want to do is chart this as a support level right there. That's support. This is also support. Now resistance would be up here. It could not break through this high a day. This is a major resistance level. Price shows very big resistance when trying to break through this level, which you could see it fell off a cliff as soon as it hit that level. So we would want to put a line there indicating that this is a support or resistance level. And, we want to do this pretty much every day. So, we can know whether it's in a week, few days, maybe a few hours. If price comes back around that level, we know that that was a previous support or resistance level, and it will help us with our trading. Now this video is getting a little bit longer, so we we pretty much gone over most of the juicy stuff. That's how you use support and resistance. Just like that. Yeah, you see that's resistance. This turned into support. This was resistance, but now it's support. Boom. Now there's different types of trading. There's scalping, momentum trading, and reversal trading. Scalping, typically, you enter and exit very quickly for just a few points or few ticks. There's 4 ticks in 1 point, which is like $1 type of deal in NASDAQ, right? So if price is $20,000 on NASDAQ right now, or 20,000, 1 point would be 20,001. 2 ticks above 20,000 is 20,050 cents. Okay? Scalping, typically you'd go for 4, 10, 15 ticks, sometimes a few points. It all depends. Pros and cons of scalping: high risk, high reward. It's risky because one person can fuck up your trade. Um, there's a whole session on scalping I need to go over with you guys. There needs to be a whole master class on scalping. Same with momentum trading, with entries and exits and real world examples. Reversal tradings, how to spot reversals. These are all things I got to go over in depth and in detail um, with a whole nother video. And if you guys are interested in learning more about these kind of trading techniques and different types of trading and different styles and strategies, then sign up for my Capo Mobstership at dgtmafia.com. There's plenty of videos going over all different types of strategies and psychological tips and much, much more to help you become a better trader if this is something that you are interested in getting into. Capital allocation, stop losses, stuff like that, managing emotions. These are all things that are very crucial to day trading. Managing emotions is one of the most difficult things that you could do. When you see yourself minus $500, minus $5,000 while you're in a trade, and you're doubting yourself, but you had this plan and it still didn't hit your stop loss, and it's kind of flirting with your entry. Should I exit? Should I just take a small loss or something like that? Typically, you want to do robotic trading, right? You want to fucking find an entry, find a stop loss, and find a take profit, and no matter what happens, let it play out. Unless something happens like news in the world or something like that, and you need to emergency exit your position, or you decide that it's not a good trade for you. But typically, 90% of the time, you want to set your stop loss, you want to set your stop profit or take profits, and you want to um, let the trade play out, because it will go up and down. You'll go into profit. You'll watch all your profit go away. That's the stock market. It moves up and down like crazy. But you want to kind of be robotic about it and just set it and let it play out. And one tip I could give you to be a better day trader is make a plan. Be like, okay, I want to enter right here. I want to put my stop loss right here. I want to put my take profit right here. And then don't take that trade. Instead, remember where your stop loss was and enter your trade there where your stop loss was, and then adjust your stop loss and take profit accordingly. Because I cannot tell you how many times I saw a beautiful trade, put in my stop loss, everything, went straight to my stop loss, and then it went straight to my take profit. That's a pro tip right there. Put your entry where everyone else is putting their stop loss. Now, what are stocks? I mean, this is stuff that, you could watch YouTube videos on. Ticker symbols, NQ is my ticker symbol. This is a ticker symbol right here. NQU 2024. NQ is the ticker symbol. U is the month of September for the contract for the contract period. Futures contracts expire quarterly, so every 3-4 months they go on to, the next letter. It'll always be NQ, but then there will be another letter after this based on the month and the year. And then, ticker symbols like SPY. SPY is the index of the 500 or the Fortune 500 companies. Um, there's Apple, AAPL, that's the ticker for Apple, stuff like that. There are stocks that pay dividends. You buy the stock, they'll pay you monthly interest. This is stuff you could look up on YouTube. Don't need to get too far into it as this video is getting pretty long already. And because this video is getting very long, there are going to have to be more videos, more masterclasses to, spot entries, timing for trades, exits and entries. Trading is all about timing. You got to have, it's all about timing. That's really what trading is. It's about timing. So I'll have a whole masterclass on timing as well. And we can't really get back into the basics of options because this video is getting a little too long. But basically, calls and puts. Calls mean you're betting on it going up. Puts, you're betting on it going down. How options work, they have Greeks. So theta is one of the main Greeks that you need to worry about. Options are a tough instrument to trade because every minute, every day, every hour that goes by, there's a thing called theta, and it eats away at your money. You lose money the longer you're in an options contract trade. And you have to choose a strike price, an expiration date, and typically we trade premiums. Typically you don't want to wait for your options to expire and force you to buy 100 of that stock. Typically you want to day trade option premiums if you're going to day trade options. This we're not going to go over. Choosing the right options, nope. Now futures contracts, we already went into it. Contract size, margin requirements. This is stuff that we already pretty much went over. Prop firms are a great source to take advantage of. And there are some books and courses and online resources that I could recommend. Books, The Mental Game of Trading is a great book. The Disciplined Trader is a very good book. And also, The Best Loser Wins is a great book. That one is by Tom Hugard. The Best Loser Wins. Highly recommend you read those 3 books if you want to get into day trading. And books are very helpful. Courses, I have courses available with the DGT Mafia. If you guys wanted to sign up, feel free. DGTmafia.com. The prices will vary. Right now, I think you could get my courses for like $20 or something like that. I'm going to be raising them up to significantly higher later. But it also comes with perks in the Discord along with other things as well. Take a look at the website dgtmafia.com to learn more. But crucial things when trading, you have to make a trading plan. You have to make an entry, you have to make a stop loss, and you have to make a take profit. Don't just blindly jump into a trade hoping it's going to go in your direction, because you will be gambling, and you will not learn, and you will not achieve long-term success. Always continue educating yourself through courses and seminars, tons of free stuff on YouTube, tons of videos. Find someone you like that you want to learn from that actually is profitable, and learn from them and try your best. Journal your trades, do everything you can, because trading can be life-changing. I know it was for me. It changed my fucking life. That's why I'm making videos like this. That's why I'm making videos to teach people how to day trade. I've lost hundreds of thousands of dollars of my own money going through trial and error because I didn't, buy a course or anything like that. I wish I would have done that because it would have saved me tons of money And I wish I would have fucking used prop firms to mitigate my risk, which, those are all mistakes that I made that you don't have to make because you're watching this video. And that is it. And unfortunately, I'm not doing this live. This is recorded. So, if you have any questions, you have my Instagram, damngoodkyle. You can see it on the last page here. Thanks for watching. This is my YouTube channel, Damn Good Trading, the Damn Good Trading Mafia, and Damn Good Kyle is my Instagram. Damn Good Mafia is not my website. My website is dgtmafia.com. This is my website. There is no other website. Any other website is a scam. Any other handles on TikTok? My TikTok is Damn Good Kyle. Those are only me. There are a lot of impersonators out there. Do not fall for it, okay? Now, if you like this video, I'm happy. And, if you want to join the Damn Good Trading Mafia, this is the website, tgtmafia.com. You get lots of perks. You get access to me. This is the pricing right now. Pricing is going to vary. I am live day trading on YouTube all the time. So if you don't want to purchase anything, you want to learn just by watching me trade on YouTube, feel free. Damn Good Trading is my YouTube. I go live very often. And with that being said, hopefully you guys enjoyed this video. I wanted to keep it just an hour, so we did it. Thank you very much for watching, and if you have any other questions, feel free to DM me. Peace.